Welcome to Yellow Tunnel. My name is Carpel. I'm CEO and founder of Yellow Tunnel, and today we're going to have our weekly discussion of current market conditions. We're going to talk about interest rates today, specifically where's the bottom in the market, how do you find the bottom in the market, and what to expect next as we approach in August, September, which from seasonality point of view usually are volatile months. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Vito, sorry if I mispronounce, Arnold, welcome. This is my brief bio for those of you who are new. The difference between Yellow Tunnel, maybe some of the other services or subscriptions similar out there, is that we do both. We have a team of financial engineers that concentrating on video models based on AI. My background, I was a CTO and executive president of several fintech companies, startups here, the companies that went public in Chicago. So that's where I got my experience. I have a master's degree in computer science. So I was able to build a team of financial engineers that are building new models, enhancing existing models, and give us signals, short-term, long-term, medium-term signals. And then I use these signals in the live trading room every day, where you can participate live or watch the recording, right? And every trade is recorded. So that's the difference between Yellow Tunnel and maybe some of the other services out there. Disclosures are also important. I'm going to go through specific trade ideas today. So disclosures are important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. You can always pause the screen if you need more time to read the disclosures. All right, before we talk about trading psychology, let's talk about current market conditions. So looking at the profit accelerator for spiders, still see, I think the bottom line, we still see an uptrend. We still see a strong uptrend in the market. So medium term to long term, I still think we're in a bull market. Short term, obviously, market is oversold, right? Market is oversold, but could continue going lower, right? So let's look at the spiders based on the model, or based on the current price action on Friday after the unemployment data, which ticked up. Now we're basically in mode, right? Market participants are in mode that bad news, economically bad news in the market is bad for the stock market, right? So when unemployment ticks up, or when manufacturing data slows down, or when credit card defaults on the rise, then the market sells off, right? And you have sharp, basically precipitous drop in 10-year yield, precipitous drop in 2-year yield. Last, in the past couple of days, with the anticipation that the Fed will cut, interest rates, but not only will they cut interest rates, they will cut them aggressively, right? They will cut them aggressively because of potentially recession, right? Potential recession, that the Fed is already late in the game, and unemployment is going to continue to ticking up, and economic activity is going to decelerate. So the question of soft landing, right? We were talking about soft landing and hard landing. 2022, people were in the hard landing camp, and they were right. In 2024, most people were in the soft landing camp, right? That was not most people, but at least the accepted view is that we have a soft landing. An accepted view in 2024 is also that we have a soft landing. So now it's been challenged, right? It's been challenged, and the market is trading as if we're going to have some kind of hard landing or recessionary pressure, and that's why treasuries are kind of moving vertically high, right? We are at, I think, 2024 high in TLT, or getting close to 2024 high in TLT. And also VIX, right? Kind of a parabolic move in VIX. We were as high as almost 30, right? Almost at 30. It did pull back towards the close of the session, but we were at these volatility extremes, right? Because not a lot of people are hedged, right? One of the issues is that in terms of positioning, not a lot of people are hedged, but we're getting to these extreme levels of 2023 and actually not that far from 2022 extreme. So from volatility point of view, we're already reaching these extreme levels in VIX. Let's look at the positioning. So dealer position is also very important. This was as of Friday. Let's try to load this data today. So volatility is high, and then another, while it's loading, the other observation is small caps, right? Small caps actually broke to the upside, but again, they're very sensitive to the perception of recession, right? Usually during recession, the first sector that is leading are the small caps. And you have this sharp reversal last week and basically broke below, right? We're trading below the breakout level. Let's try to move this here. Right, so we broke below 50-day, 50% retracement, but more importantly, we broke through the March high. This was a breakout. So false breakout is usually on a very large volume, right? This is a very bearish price pattern, right? Because when we met last Sunday, we were talking about, well, small caps are, participating, mid caps, you have a broadening of the rally, but now, percentage of stocks above 50-day moving average, we have a sharp reversal to the downside, which more or likely will continue at least, for the next few weeks, right? So the fact that small caps have a false breakout, right, kind of undid all of the gains, this is usually a pretty bearish price pattern indicating that potentially there is more room to the downside. And you kind of see it in the value stocks, right? Value stocks also broke out of this ascending triangle, and now they're reversing down, right? This uptrend still held, but nonetheless, we are trading right at that level. So if there is another week where all the value stocks are also participating, right, like JP Morgan had a pretty sharp sell-off, right? This is not a soft landing trade, right? This is sharp reversal in banks, i.e. potential recession. All right, so spiders closed at 532. Let's look at the where the dealers are positioned. So I'm looking at the gamma levels, right? Gamma exposure for dealers, right? Because every time we buy puts and calls, somebody on the other side have to sell it to us, right? These are the market makers, right? The dealers. And if they're long the gamma, right, they're forced to buy the stock, right? So the idea right now is trying to figure out where are they forced to buy the stock? At which levels, right? So if you look at the spiders, I don't think it shows Friday's data, so we have to, Friday there was a lot of put buying. But at least until August 16, right, for the next 2 weeks, as we approach an expiration, the next level is 520. 40,000 then at 520, there's another 35,000 at 515. That's a pretty strong support for August 16th, right? For August 16th, let's see, did people buy this Friday? Not a lot, not a lot. So up until August 16, I think 515 to 520 levels should be at least a good support for the market to stage some kind of a rebound, right? Stock market is oversold. 515, 520, that would be April highs, right? The April failed breakout in April. 2 standard deviations. So 515, 520 on the spiders, especially that semiconductors are already oversold, right? Semiconductors are already at 200-day moving average, above average volume. So probably we'll find some kind of a support around 200 to 10 level. It looks like that 515, 520 level should hold for the August 16 expiration, right? August 16 expiration. After August 16, right? So in 2 weeks, once the August 16 expires, at least as of right now, you don't really have any support up until 500, right? And then most people build in their position at 480, right? 480 with anticipation that, you know, that the April lows will hold. So it looks like scenario, you know, something like this could happen, right? Where we are basically retesting April lows. So those are the 3 scenarios, right? Scenario number 1, we're trading in the, well, scenario number 1, you know, maybe Powell comes out during Jackson Hole or even earlier, and basically because what's it, the earnings season is kind of already, we know about the earnings, right? We had Amazon, they kind of one of the largest pullback in recent history, right? We had Intel, largest drop in recent history, or in the past 50 years. I think Intel drop was the largest in the past 50 years. So people are very sensitive to, you know, earnings, but for the most part, I think 70% of S&P 500 companies already announced earnings. So the rescue is not going to come from the earnings, right? I mean, we have NVIDIA end of August. We do have NVIDIA end of August. But until NVIDIA end of August and Jackson Hole end of August, I think only if Powell comes out and say, listen, we're behind the ball, curveball, yes, 50 basis points cut in September, right? And then you have scenario number 1. Probably, you know, could happen, right? Just depends on the timing, right? So scenario, we're talking about going into the elections, right? So August, September, you know, October, right? End of Q2, start of October, November, start of Q3, Q4, right? So we're talking about end of Q3, right? What to expect for going into the end of Q3, end of September, maybe spill over into October. Scenario number 1, we're trading above 560. Scenario number 2 is kind of the score scenario that I outlined, right? Market short-term oversold. SMH is already at 200-day moving average. VIX is already at extremes, hit the 30, actually retraced back towards the end. You know, we bounce back, right? We have this A, strong A, you know, pretty meaningful rebound B. We have C, right? Then we have D, right? We have D, and then we have E, right? Wave E, right? That's a possible scenario going into end of September. Hitting 200-day moving average, holding 494, right? We are holding by definition, as long as the market trades above 494, long-term, medium-term trend is intact. Bullish, strong bullish momentum the past 2 years. If we break through the 494, right, decisive break to the downside, right, 480, 460, then you have the scenario number 3, kind of a recessionary, right, recessionary trade, maybe more deterioration of the macroeconomic data, and usually a recession is always in the rearview mirror. We're not going to know whether we had a recession up until market way starts rebounding. So you won't know, but you know, right now clearly bad news is bad for the market. So as CPI data comes in, as manufacturing data comes in, as unemployment data comes in, right, next print is beginning of September, we could have another, you know, tick up in unemployment. Then you have scenario 3 where we break through the 494 level. We do see a lot of positioning basically at 494, right, 485, 495 level in the September expiration, right? But up until September, not much support at 494. So those are the three possible scenarios. Scenario number one, we make a new high. Scenario number two, we are stuck in this pattern of lower highs and lower lows going end of September. So number three, we are accelerating to the downside because more and more people shifting their mindset into hard landing narrative. All right. Arnold, Glenn, Lalit, Luis, Peter, Vida, Walter. How many of you say one? This is just a 5–10% correction in the market is always a good and healthy correction. It should be short-lived, and bulls are going to step in and drive the market to the upside, right? This was a narrative as early as last week, right? If you look at my recordings 1 or 2 weeks, I said it's a short-lived pullback, and we're just going to continue going. Well, I did hedge, so that's good news. I was able to actually hedge some of the positions, but that was the narrative 2 weeks ago. Soft landing, any pullbacks, short-lived. Now tables have moved, right? We have to adjust. Unemployment ticked up significantly, rates dropped precipitously, right? So maybe scenario two, maybe it's 5 to right now S&P is close to 5. This is 5% pullback. So another 5% pullback would be basically 500 level, right? So 10% pullback, 10 to 12% pullback, that would be that April lows. And then recession, 20% pullback, right? If you have a recession, average recession pullback, 25 to 35% pullback during average recession. So if you say 3, you're basically saying, economic conditions will deteriorate, and we'll find out soon that we're actually in a recession. So how many of you say 1? How many of you say 2? How many of you say 3? Loli, 2. Thank you. Arnold, Glenn, Luis, Pierre. Why is this exercise important? Why are we doing this exercise? The main answer why we're doing this exercise is because, if you're a long-term trader or you're short-term day trader, you need to know how to position your portfolio, right? How many long, how many short positions you want to have, right? Maybe for day trading is less important, right? What's going to happen in October because you're only thinking about Monday and Tuesday. But if you're holding position overnight, you want to know, if the market is going to continue making lower lows, low and highs, then you should have bearish portfolio, bearish bias, right? More bearish positions in your portfolio. If you say 1, then you should have more than, more bullish positions than bearish, right? You buy in a pullback. Finally, we have 5% pullback. You want to start, adding to your long position. And if you say 2, you probably want to be market neutral, right? When market is oversold right now, well, maybe you buy stocks. When it sells off, maybe you sell. So you sell on the rallies and you buy on these sharp pullbacks. Lali 2, Luis 2, Peter, Vito, anyone else? All right, I'm also going to go with 2. I think the core scenario is a pattern of lower highs, lower lows in August and September. The only thing that I think can save this market, like what will be a turning point, it has to be, usually it's with the Fed, like don't fight the Fed, right? I think right now the reaction to Powell's Fed decision on Wednesday and Thursday is that they're late in the game, right? They did not commit to the rate cut. They said it's on the table, but that doesn't mean they're going to do it. And now the consensus they're late, and they should cut 50 basis points in September, not just 25, right? So until Fed basically comes out and say yes, we're going to start cutting rates, I think this is kind of the pattern of lower lows, lower highs. I don't know when that next event, probably either Jackson Hole or next unemployment data, right? Something, either macroeconomic data or Powell will actually come out and say we're close to the bottom. Until then, especially we start in August, I think there will be a pattern of lower highs and lower lows. All right. Any questions? So this is nice and wonderful. How do we help at Yellow Tunnel? So we do have different services. Where I actually manage money is Dynamic Power Trader and Profit Accelerator, right? So in Dynamic Power Trader, if you go to Dynamic Power Trader and you actually look in the QQQ, right? I had a QQQ trade. last 7 days. So I continue to hedge the portfolio, right? I bought QQQ put spread on July 29th with anticipation that the market is going to potentially could pull back. So I bought at $3.10, closed at $3.66, right? Looking for here 20% profit. I did the same thing the prior week, right? If you look at the last 30 days, right? Because the market was overbought, potentially could pull back. Same thing. I bought it at $3.14, sold it at $4.16, right? So continue to defend my bullish positions by buying put spread. Some people buy VIX, right? VIX, if you thought that VIX on Friday is going to spike to 30 due to rising unemployment data, then you buy VIX calls, right? You can also buy TLT, right? TLT is the favorite. We've been talking about TLT. It's finally, obviously, on a very strong volume. TLT is breaking out, right? And potentially can continue going higher if, you know, if we're talking about recession. This is where TLT is going to continue to make a strong move to the upside. It's sitting at the 2024 high, January high. If it breaks through that level, then 2023 high around 110. If you know we have a recession. So buying TLT, obviously inverse ETF. If you're not comfortable trading options or you don't like bonds, you can buy inverse ETFs, right? PSQ, right? PSQ 3 weeks in a row continues to go higher. SH 3 weeks in a row continues to go higher on above average volume, basically saying that people are start thinking about hedging their portfolio. So that would be the way you can hedge. Right now, I'm trying to get into QQQ hedge again, and I also have spiders, right? I did the same thing on if you were following the spiders trade, I'm doing the same thing on the spiders, right? I bought it at $4.89, it's trading at close to $6, and before that bought at $3.97, closed at $4.57. So continue to hedge my portfolio using either spreads, bearish debit put spreads. One way to hedge, right? This is one way to hedge. You know, I think 540 would not hold, but 525 does, and we're getting close. I mean, we're basically almost at the 525 level. And same thing, if it breaks 520 level, then I can put 520, 500 put spread, right? So that would be a way to hedge your portfolio. In Dynamic Power Trader, you can actually see how I hedge it using option spreads. And you can see the stocks that I have, right? Because most people are long, have long positions, but you want to hedge them, right? You want to hedge them on the way down. And this is one way to hedge your portfolio. So that's Dynamic Power Trader. Aggressive Power Trader, you can actually see signals, right? Every day there are short-term signals. Bristol Myers, right? Friday was Bristol Myers. Despite the market sell-off, actually model did a good job finding that, you know, even though most stocks are highly correlated to each other, and, you know, when the market sells off, the rest of the stock market sells off. But the purpose of this model, short-term model, is to find which stocks are outperforming the market. I haven't done the this Monday, but you can see market was sold off, but people are hiding Bristol Myers, right? People are rotating to safety asset classes. Duke Energy, right? Duke Energy is continuing to drive higher, right? Or XLU in general. Insurance companies are outperforming, right? Like Allstate outperforming the market. People are still buying insurance, right? Allstate is at all-time high. Coke, right? So some of the defensive names, interest rate sensitive names, this is where people are hiding. And this is the purpose of aggressive power trader, to find the stocks that can outperform the market or at least give you a hedge in your portfolio. So that's aggressive power trader. If I trade any of these stocks, you can actually see open orders and positions. You can enter your phone number, right? You can enter your phone number to get the alert. You have history every day. You can see what were the trade ideas, but more importantly, we have live trading room twice a day, right? And every single trade is explained in these videos, because these are recordings of live training room, and I encourage you to review that. And then if you're, NVIDIA is the most popular stock, then you can type in NVIDIA and actually, or any other stocks, right? And click on analyze, right? And NVIDIA still in a strong uptrend. Potentially could get to 100 level, right? We talked about 95, 100 level on NVIDIA. But at least for now, the long-term trend is still intact, right? We haven't broke the long-term trend. But, getting close. How's NVIDIA actually looking? I think it broke through. Yeah, it broke through, it made new lows, but it's sitting just like QQQ. It's basically gave up all of the gains since March, right? Give up all the gains since March, and now trying to close, it closed this gap and then trying to close the May earnings, right? May earnings gap. But short term, obviously oversold, right? It needs to bounce and try to regain 50-day moving average. So I think that's coming probably in the next couple of weeks, that short term bounce. So that's aggressive power trader. We have the model, our AI model that you can use to analyze any stock you want to. But if you want to see my portfolio or recordings or get an SMS message, this is the aggressive power trader. Similar weekly power trader, longer term signal, right? The aggressive power trader is for short term signal, very sensitive to short term price fluctuations. Weekly power trader is more of a medium term, right? Just because we have a huge sell-off on Friday, it doesn't mean that everything got reversed, right? So it has like Bank of America, BSX, but short term, obviously, Bank of America had a sharp pullback, right? You kind of, fell off very quickly. So that's the weekly power trader. I don't trade all of these signals, but these are the signals that if you're an experienced trader and you're looking for opportunities, which stocks do I buy? Well, maybe Bank of America now is getting to oversold level, and this is same setup, right? Give up all the gains since end of March, beginning of April. Maybe it's start thinking about it, right? Maybe not wait till it's some kind of stabilization, but maybe start thinking about buying. So that's weekly power trade. We're talking about dynamic power trade is actually my portfolio, right? So QQQ, hedge, spiders, hedge, still long FXI. For now, still long IWM, even though IWM had a pretty sharp reversal. I did close the option spread part, but still have a stop, right? So I'm waiting to see if the 50-day, if we're gonna break through this support level, right? This is a long-term going back to 2021. Going back to 2021, so I'm waiting to see if this, I mean, it looks like we're going to probably break below that level, so then maybe just close the spiders, right? But you do have a lot of support, right, in this downtrend, which was broken, and now 200 level, right? 200 level has been well positioned for a long time, so we'll see if we're going to break through that level. So that's dynamic power trader. Earnings power trader is where I trade earnings. There's always earnings. I think I did Pfizer and I did Apple. Right, so I did Pfizer, I did Apple. So this is where I look for these asymmetrical returns, right? You can buy a call spread and a put spread. I bought it for 80 cents and closed it for $1.20, right? So 50% return basically in the same day, right? So depending on volatility, right now volatility is rising, so buying butterflies, right, directional butterflies is one way to capture the momentum in the market. It didn't really work out on Pfizer. It got close to 30, it actually was at 32 or got close to 32 level, right, but very brief period of time. But this is an opportunity where you have a well-defined risk, right? You have a well-defined risk, and yeah, it actually did get to 31. Oh, quick, 31.50, but it did pull back with the rest of the market. So earnings power trader is where you can sell short volatility or you can be long volatility, right? So Apple was a good trade because market sold off. I put on put butterfly and a call, directional put and call butterfly. I'm risking no more than 80 cents. That's my maximum risk. But in this example, I was able to capture 50% return in short period of time. So that's earnings power trader, and profit accelerator is also basket of stocks that I'm managing, right? We talked about FXI, we talked about IWM, but also you can see my hedges, right? You can see hedges like spiders, right? You can type spiders. If you go to dashboard, you can see other services that we provide. Getting started guide, we have educational webinars that you participate in. Now, I encourage you to schedule one-on-one consultation with our support staff. We have a blog every Sunday, we publish blog, and then every Wednesday, video blog. And then you can go through each of these services, kind of see what the advantages of each of these services used. And then I encourage you to review that dashboard. Please add info@yellowtunnel.com so you can get our emails. Any questions? Arnold, David, Glenn, Ken, Lalit, Louis, Mark, Peter, Vida, Walter. Some of you came in a little bit late. Anything you want me to go over? I mean, the purpose of this webinar is to kind of show you what are the possible outcomes, right? And you have core scenario, you have usually best case scenario and worst scenario. Core scenario, I think we're not at the bottom yet. And I looked at the position. I think August 16 is pretty well positioned to hold 515, 520. So I think in the next 2 weeks, probably a rebound, right? And somewhere between 520 and 515, we'll find support. And then September is not well positioned, at least not yet. So unless we're going to build a lot more support in the September put buying, right? I'm looking at the dealer exposure, gamma exposure. Gamma exposure is when the dealers are long the gamma. In this case, they can be short or they can be long. So they long the gamma. So that means if you have a large position at 500, dealers are forced to buy at 500 level. And right now, we don't really have any large position up until 480 in September contracts. So after August 16, Powell has to say something positive to reverse the course in the market. Otherwise, potentially, we could get to this 500, 480 range, which would correspond to the April lows. I think April lows will hold. We might overshoot on the downside, but I think by that time, there's going to be enough hedging where that level will hold. But right now we are in a situation where more like that, market is vulnerable to retest, maybe not in the next 2 weeks, but in the next month to retest April lows. And I think that's something you want to be prepared for. I think right now probably market neutral is the best strategy, right? It's a pattern of lower highs and lower lows. You sell when the market rallies. You potentially buy to close some of your hedges when the market pulls back, and I would be market neutral, right? Kind of, but that would be my strategy. Any other questions on Yellow Tunnel, on the positioning? All right, if there are no questions, you guys are awesome. Thank you very much. I appreciate your participation. We have a lot of people today again, and it's, first week of August, usually it's slow. So I appreciate your time. I think next Sunday, we're not going to have a webinar, but we're going to have it on Monday night. So keep an eye on the emails from Yellow Tunnel at info@yellowtunnel.com to your list of contacts in your email provider, so we get whitelisted, right? Sometimes we end up in promotional or spam, so please make sure you add info@yellowtunnel.com or flag us that this is important email, right? Depends on what email provider you're using. And I will see you either in live trading room Monday, bright and early before market opens. We're going to have a live trading room. Hopefully I'll see you there, or I will see you during these webinars. Thank you very much and have a great day. Arnold, David, Glenn, Ken, Lalit, Louise, Mark, Peter, Vida, Walter, Fred, Bob, John, Steve. Thank you very much and have a great day.